We're going to do a brief video comparing algo trading versus moving average. And we've got a daily chart on here of Tesla. We've got three moving averages. We've got a green 5-day, a red 20-day, and a blue 200-day moving average. So the question is, how can you manage to do analysis on 190 plus stocks a day before 7 a.m. using moving average analysis? And the answer is you can't. We have 190 stocks down here we're going to show you in a minute for algo trading. But right now we're going to look at moving averages, the benefits, the drawbacks, and then we'll show you how to get access to 190 plus stocks plus a lot of other things that we covered RBAM research every morning before 7 a.m. absolutely free, no credit card required. So let's take a look at moving averages real quick. We've got three on here, as I said, the 5, the 20-day red, and the blue 200, and we're looking at Tesla stock. Daily chart, moving averages are great. There's nothing the matter with them. The issue with moving averages, how do you do an analysis like this, which we're going to do real quick in a second? How do you do this on 10 stocks, 20 stocks, 50 stocks, however big your portfolio is? And the answer is you really can't do it. So let's take a look real quick. We can see here, and a lot of people would disagree with moving averages, but I happen to think they're great. You can see here that the 200-day moving average, Tesla came down off of a bull market and bounced against it. You can clearly see that. That's not magic. Other people are following the 200-day moving average. When they see it touch it, they start to buy it. And that's all that's going on right here. Many people around the world follow a 200-day moving average on stocks. When it touches it, they buy it. We see that it took off, it rallied, it came back down. Look what happened when it touched it from the top again. It went through it. Why? Because this is the second time in this run that it touched it, so they don't have as much conviction. But they still bought it. You can see it oscillated back and forth over almost 3 or 4 week period of time, and then it shot up again. Same thing, it came back down, it oscillated back and forth for a couple weeks, and then it finally plummeted into a bear market. So we had people here buying the stock, thinking that it was going to go up because it was tapping a 200-day moving average. We had people here shorting the stock, thinking it was going to break the 200-day moving average. And the short sellers won. Same thing here. The market rallies up, and we're just fighting. Short sellers are shorting it. People who bought it down here are covering because it's tapping a 200-day moving average. So the bottom line of it is these moving averages, the 5, the 20, and the 200-day moving average are great. There's a lot of things on that I could spend here talking to you about moving averages, and we have other videos if you're interested in that as well. We'll publish some videos just on moving averages. But this video's on algo trading versus moving average. And you can see, as great as they are, they're number one, subjective, and number two, it takes a long time. Now I'm going to show you the same Tesla stock here using algo trading that RBAM Research puts out every morning before 7 a.m. So we just take Tesla, we go down here, we could plug it in, but we already have it up, and we find Tesla right here. This is 190 stocks, 100 plus 90 stocks that come out every morning from RBAM Research before 7 a.m. and you can see they're out from Monday today, the 26th. You find Tesla, you can plug it in at the top of the search block, but you plug it in and you get 3 different prices for Tesla. You get a 1-day hold, a 5-day hold, and a 20-day hold. In a minute, I'm going to show you some moving average systems that are built by algos and compare them to what we have above. But you take a look at this and you get entry prices, 268, 270, 273, and they correspond to the holding periods that we have here. So a 1-day hold means you buy today, assuming your own analysis says it's a good idea, and close out at the end of trading tomorrow, just before the market closes, at a loss, or take your profits as soon as you get it. Same thing with the 5, same thing with the 20. If you were to buy in the 20-day column, assuming your own analysis said it was a good idea, you buy around 273-ish, close out at the end of 20 trading days at a loss, or take your profits as soon as you get it. So you can go up here now. These were put out last night, but they typically come out available in the evening before, but we advertise, we put them up before 7 a.m. the morning of. So let's go up here and take a look and see what Tesla's doing today, the 26th. And we can see Tesla's range today is 284 and the low of 270. So we go back down here and check and see. So we've hit all of these today. So you could have used all these, assuming your own analysis said they were a good idea, as a way to determine what's a good entry price for you. These are for entertainment purposes only. You should always do your own analysis. But that's how these work. Doing these algo trading outputs, we put these out, this particular 190 stocks, we put these out in a couple minutes. The computer does all the work, we just input some data, and the 190 stocks pop out every morning before 7 a.m. So that's how we think, that's why we think algo trading is superior to moving averages. There's nothing the matter with moving averages, they're great, it's just who has the time. We don't. So you can get these 190 stocks and a lot of other things absolutely free, no credit card required, at rbamresearch.com. We're going to show you the link in a minute. Let's go down here and take a look at our moving average comparison that we have right here. This is a 30-day hold system. These are algo trading outputs, and we cover the SP 500 and some of the major stocks. Now, these are 30-day holds. So get in today if your own analysis says it's a good idea. Take a position and then get out at the end of 30 trading days, worst case at a loss, or take your profit sooner if you get it. And you can see here that comes out with either buy, a flat, or a short position and an entry price. You can see Tesla today's a buy at 284.5, and again, this is a 30-day hold, but we traded through that, so this would be a live price today, again for entertainment purposes only, but would be a live price. These, same thing. These take a hair longer for us to put out, but we cover whatever it is, 10 or 11. I think it's 10 including the S&P 500, and we can put these all out in about, we have to do some adjustments. They're not all computer. Some of the adjustments are manual, but we can put them all out in about 7 minutes, 8 minutes. We can come up with every one of these entry points and the prices. Again, for you, they'd be instantaneous. You just log on here, get them for free, and absolutely no cost. So that's the main difference we see between algo trading and moving averages. It's not that one is better than the other. It's just this takes minutes. Moving averages takes hours. For you, this takes seconds. You just log on your account at rbamresearch.com, absolutely free, and get them every morning before 7 a.m. And if you tune in the night before, a lot of times you'll see that they're already updated. You just look for a fresh date, and that way you know they've been updated. Again, you can get all this, including currencies, including crude oil, S&P, gold, all of this at rbamresearch.com. We cover 190 stocks, the major forex pairs, BTC crypto, and the most liquid futures. There's a link in the description below. Everything's out, as we said, before 7 a.m. Follow that link to rbamresearch.com, put in your email address, and get everything we just showed you absolutely free. That's algo trading versus moving averages. They're both great. We favor the algo trading because it's a lot faster and a lot easier, and especially for you, you just go there and get them absolutely free. If you like this video, please click the like button. If you want to subscribe, please do that as well. If you have any comments comparing algo trading between moving averages, please let us know in the comment section below. Keep in mind, everything you've seen or heard on here, especially our entry prices and our analysis, is for entertainment purposes only. You can only use it for entertainment. You should do your own analysis always, and you definitely trade at your own risk.